Dirty dealings, corporate battles, consumer woes. This is Evening 5. Southeast Asian equities have cemented their position as a favourite play of money managers, positioning for the US Federal Reserve's policy pivot. According to a Bloomberg report, 4 of the 5 best performing Asian equity benchmarks this month are from the region, with Thailand leading the pack. The buying frenzy has put foreign inflows on track for a 5th consecutive week, while the MSCI ASEAN Index is now trading near its highest level since April 2022. Fueling enthusiasm about markets from Indonesia to Malaysia is the relatively light positioning by foreign investors, supportive local policies as well as attractive valuations. The report noted these advantages have set the stage for the region to capitalize on global investors' shift away from larger peers like China. John Wu, the founder of Valverde Investment Partners, was quoted as saying, ASEAN has been ignored for so long, and investors are beginning to wake up to the many alpha opportunities available, from the commodity companies in Indonesia to the stable real estate investment trust market in Singapore to the tech plays in Malaysia and the export plays in Vietnam and numerous recovery plays in Thailand. IOI Properties Group will launch its IOI Industrial Park at Banting, Selangor by the second quarter of next year and is planning another one in Malacca that is expected to be unveiled 2 quarters later. This means the group will have 3 industrial parks by the end of 2025, as it has an existing industrial park in Iskandar, Malaysia, Johor, which it targets will contribute up to 20% of the group's annual revenue. According to IOI Properties Group COO Teh Chin Guan, this will mean a contribution of up to 400 million ringgit a year. With 3 industrial parks in the industrial growth areas of Johor, Selangor and Malacca, the group is confident the IOI Industrial Park series, which it just launched, readily positions it as one of Malaysia's premier industrial developers. They said the group has received quite a few inquiries from data centre players for its industrial parks in Banting and Iskandar, Malaysia, and hopes for some good news in the next 1 or 2 months. Looking ahead, they said that the group also has a sizable land bank in Bahau Negeri Sembilan and Segamat, Johor, which may also be turned to industrial parks. He said the aim is to have another 2 more industrial parks in the next 3 to 5 years. Retail Group Malaysia or RGM said Malaysia's retail sales missed expectations in the second quarter of this year. Sales growth had slowed 2.6% compared with a growth rate of 1.7% projected in June by members of the Malaysia Retailers Association MRA and the Malaysia Retail Chain Association MRCA. That makes the actual figure 65% below the estimate. This was despite the then weaker ringgit and visa-free entry for tourists from China and India, which boosted arrivals, as well as the festive sales during Hari Raya Aidilfitri. RGM noted that retail prices continued to rise during the quarter, while Malaysian consumers found themselves needing to manage their monthly expenses carefully in order to maintain their lifestyles. It added that the never-ending Israel-Palestine conflict had affected businesses of certain international retail brands. Overall, the Malaysian retail industry grew by 4.6% in the first 6 months of 2024 against the same period in 2023. Looking ahead, the majority of retail associations members are optimistic about the next 3 months, estimating an average growth rate of 3.6% in sales this quarter. For the full year, RGM maintained its 3.6% growth forecast. Concorde Hotel Kuala Lumpur is not for sale. Tan Sri Salihuddin Muhammad, chairman of its owner Ampang Hotel, said that the shareholders are satisfied with the progress and direction the hotel is taking. He said Concorde Hotel Kuala Lumpur, which is now in its 33rd year in the hospitality business, continues to thrive and is here to stay. He added the hotel remains focused on enhancing its services and expanding its offerings to better serve its clientele. The 19-floor 4-star hotel with 581 rooms is located along Jalan Sultan Ismail and was previously branded as Merlin Hotel. It was reported that the hotel was up for sale for 700 million ringgit together with neighbouring land, with plans to demolish the 67-year-old building to make way for a multi-billion ringgit integrated development. Ampang Hotel is linked to Sultan Sharafuddin Idris Shah, the ruler of Selangor, entrepreneur Tan Sri Syed Yusof Syed Nasir, and tycoon Ong Beng Seng via Singapore-listed Hotel Properties. The Federal Territory of Kuala Lumpur Land Registrar has been granted a stay on the transfer of the Duta Enclave to the liquidator of Semantan Estate 1952. Last month, the Land Registrar filed for the stay of the High Court's order to process the transfer of the 263.72-acre land. Judge Dato Ahmad Shahri Muhammad Saleh, who gave effect to the order, noted today that there are special circumstances due to the presence of government agencies and buildings, including the National Archives, that hold the country's historic records. The land also houses personnel manning those agencies. Ahmad Shahri said this is not a typical run-of-the-mill case. He called it an extraordinary one, given the nature of the dispute and the time it has taken to finally and decisively come to this stage. As such, the considerations in determining whether there are special circumstances must be made based on the unique and unmatched background of this case. If implemented, he said, the judgment would create immense irreversible consequences, and it is appropriate for a stay to be granted until the determination and exhaustion of the Land Registrar's appeal.